Okay, good morning. Testing, 8:39 on the 30th of September. If you can hear me and if you can see my charts, please do type Y. And a Y for the voice and a Y for the charts. Yep, excellent. Hi guys, how you all doing? I hope you've recovered after what was really, certainly in trading terms, quite a bruising battle yesterday. It was a good day for fighters, but it was a tough day for any type of direction. As we will see as we go through the charts shortly. So I hope you've slept well. I cannot claim to doing that. My son's driving me crazy at the moment, but I hope you slept well. You're fresh in the face and bright-eyed and ready to go. So today is the last day of the quarter, and as you would have read in Deutsche Bank's read, this is one of the worst quarters for global risk in 4 years. So a very, very heavy quarter for many Chinese indices or Asian indices, I should say, down between 20 to 30% on this quarter alone. 20 to 30% on this quarter alone. That is phenomenal. And we're in the last day of that quarter, so you can expect some repositioning. But how has this morning started, first of all? Well, it started with a pop. But before I get on to this morning's market activity, let's just have a bit of a recap about yesterday, because we did get news out yesterday, obviously. We had news out of Europe come out more or less in line. Euro area confidence was unchanged, final reading of September minus 7.1, but slightly better news elsewhere on the detailed data coming out of Europe. What I'm going to focus on here is just three products looking at yesterday. I'm looking at the DAX. We're going to look at the Euro USD whilst I talk about Europe, and I'm going to look at the Bund whilst we talk about Europe. So let me just bring that Bund up on a 5-minute chart. So slightly better than expected data coming out of the Eurozone, and you can see we opened up in fixed income products lower, so strong trend lower in the Bund, really from 156.50 all the way down to 155.90. So a 60 pip sell-off in the Bund from the open yesterday. That was quite a phenomenal move, and one we kind of forgot about as we went through the afternoon. We then found a double bottom, 155.90, and retraced the whole move as we went into the close in the Bund. And that form, or that pattern of retracement, is certainly one that we saw abound yesterday. If you look at the S&P, for example, we were up significantly on the day and down significantly on the day multiple times. It was like some yo-yo, some kind of yo-yo. This is the move after the European data that was slightly better than expected. Equities moved higher, so this is the S&P following the DAX higher. That's when fixed income was coming under pressure. But we then spent the majority of that morning session, and poor Mark in this room was in a short S&P trade here from about 9:30 to about 1 o'clock in the afternoon. And you can see here that level that I've highlighted, 1880. You can see we were just jostling around this key price, unable to make a decision. If you thought the level would hold, you would buy it and probably get stopped out. If you thought it would break lower, you would sell it and probably be unable to hold it. You know, it's really difficult over 3.5 hours or 4 hours of flat line market activity. Knowing when to stay out of this type of period is probably as important as knowing when to trade. This is a really important thing. Anyway, so the trade just popped higher before, of course, disappointing for Mark to see, we crashed back lower through the 1880. How long did this last? Well, that was on the 230 cash market open. Almost as soon as we had that move lower. Look how quickly this was then. We then fired higher, and this was after US data in the afternoon. Specifically, we had stronger than expected September consumer confidence data. And this was a really tricky one to trade, actually. Initially, it created a lot of noise in the equity space. Let me go into it a little bit more closely on the time frame. So here's the sell-off after the cash market open, or leading up to the cash market open, I should say. That was one of the tricky elements. Again, I'm looking at the S&P leading up to the cash market open. We had that pull lower all the way down to 1866. Then the data came out here. And the data came out here, and the S&P was really quite unsure what to do with it. Now, what I've got here is a look back at then what was happening in the currency space, because this was better than expected US data yesterday, better than expected US consumer confidence. And initially, as soon as that data came out here, you had the euro versus the... It's ran on through there, do you know? You had the euro USD spike lower, as you would imagine that it would, on better than expected US data. But it was, I mean, this was a really choppy and difficult one to trade. Only when equities continued to move higher to reflect this better than expected US data, only when equities really did begin to have that push, we then got a push lower in the euro US dollar, so dollar strength down to test that pivot level. If you remember, I was talking about that trade in quite a bit of detail to you guys. Let's see if I can put those positions on. It was a real chop zone. It was a real mess, to be honest. And I thought that's pretty much where our day ended, not too far away from 4 o'clock. But after that, finding support at the pivot in the euro USD, we retraced that whole move lower. Equities also then once again retraced their subsequent move higher. So it was an absolute roller coaster of a day. Very, very difficult to trade if you were trading at the wrong moments, if your timing was slightly off. Also, one of those days where, although we actually pretty much finished where we started, certainly a day where you can lose a lot of money, unfortunately. So here, those trades on the euro US dollar, you can see after the data trying to sell it, selling 12 contracts there, getting stopped out, trying to sell it, no. Finally being able to hold on to some of those shorts, and only when the equity market took the push higher, then did you find the dollar start to strengthen. So this inverse correlation is still very much there, but we play the tape forward a little bit. Equities then crash back down below that 1800 handle. The euro dollar then fires through the highs. Still very much this inverse correlation, and we're back to where we were after the cash market open. So a very topsy-turvy day, high volatility, high intraday moves for us intraday traders. And I think, again, what we can learn from a day like yesterday is, be proactive with exits. A lot of the time, I've seen people in fantastic trades not being so proactive with exits and then just seeing the market retrace all the way. In this type of market condition, don't be afraid to make money, and you can always obviously get back in. One trade that's also been very confusing here, we're looking at gold. We've been talking about gold quite a bit. I know none of you guys trade it, but just out of interest, I was looking back at this chart, and you can see fundamentally, medium to long term, I'm absolutely a bull in gold. I know there's no inflation at the moment, and that's what's weighing on gold. I do understand that, but I think the expectation of further monetary easing and the delay of the Fed rate liftoff, combined with global slowdown woes, will support gold in the medium term. If you hadn't read it, Jan has done a good report on this as well, giving that type of point of view. And here you can see over the last, 3 weeks or 2 weeks, every time I've bought gold, I've been on side, taken it off for scratch, been on side, taken it off for scratch. You could perhaps blame me here for not practicing what I preach and being more proactive with profit taking, but that thing just can't take a bid at the moment. Its time will come, I hope, I believe, but not for the near term. It doesn't seem to be the case. So end of the quarter today, better than expected US data yesterday, and we've started this morning with a pop higher. So have a look at Euro stocks after that terribly choppy session yesterday. In fact, if you look at where we are now from yesterday's low in Euro stocks, this is what's quite phenomenal. Yesterday's low in Euro stocks to the high today, it feels like nothing's happened. But we're up 4%. 4.14% from yesterday's low to today's high. And that's during a quiet day. These type of markets really should be milk and honey to you guys that like to be more active when there's volatility. So up 4% now in the Euro stocks, a massive gap higher as sentiment returned. You had a positive session in Asia for the first time since goodness knows when, combined with the fact that yesterday's couldn't really make a firm trend lower yesterday. Those two things combined, giving us this opening gap in Euro stocks. Shanghai Comp having a positive day. And this gap is, I want everybody to keep an eye on this DAX. So there it is in Euro stocks. So what are we looking at? From 30.60 all the way down to 30.30. That's a 30-point gap, but more realistically, if you are short, if you are looking to sort of how I would trade this gap is if, for example, I see the let's say we're trading just above 30.60, I see other equities take a big hit lower, I would, for example, sell the Euro stocks, but I'd actually be looking to scale out around 30.44, where you have the previous resistance. You might even take one just a bit higher, 30.49. You can see why, because the gap isn't just what you see when you scroll right to the left hand of the screen. The gap is also then, you need to take into account relative near-term levels. In the meantime, though, these levels will be used as support rather than as an area to break. So keep your eye on these levels. That's for the Euro stocks. Very interesting gap there. Let's have a look at the size of that gap. So that's a 1% gap in Euro stocks, and in the DAX, again, obviously, understandably, a similar gap here. Support from the market open today, 95.87, has gone only one way higher. As it stands, given the move and given the sentiment, I wouldn't be surprised if we did beat out some support in the DAX between 96 and 95.74, so that's R1. So as long as we're above these levels, then you might want to believe that this gap won't be filled, but obviously it doesn't mean you can't trade the gap should it start to look to move lower. So equities having a firm start to the day. S&P also showing, well, actually no, obviously because trading later on in the hour is not showing so much of a gap, but now we're trading higher than the highest point yesterday. We're way higher than the highest point yesterday in European equities, but I think that just shows the strength of that rally after the US data at 3 o'clock. So after that better than expected consumer confidence data, the S&P rallied 1.3%, only to then fall by 1.3% 3 hours later. So continued market volatility, last day of the month. What have we got to look forward today on the data calendar? Well, if you go to your trading live sheet, well, we've had UK house prices come out stronger than expected. That's only very medium term data. In half an hour, we've got more data coming out of the UK. Gross domestic product, so GDP, this is the year-on-year reading, the current account data 2. Medium importance will be the growth quarter-on-quarter GDP, so that's expected at 0.7 quarter-on-quarter GDP. Quite strong, actually, when you think about it and compare it to other GDP readings you're seeing in the developed world at the moment. Some of you may have seen in the news last night Mark Carney talking at Lloyd's in London, and nothing really too indicative in terms of interest rates or monetary policy. His main angle was certainly one of fossil fuels are bad if you are an energy company. If Mark Carney has his way, if you're an energy company and you're involved in fossil fuels, your life has just become more difficult. He was absolutely leaning towards the suggestion that fossil fuels will have to be regulated out. So German data, well, we've got EU data coming out at 10 o'clock, consumer price, unemployment rate, before we then get to ADP employment change. This will be one of the important ones for the day, so that's because we've got non-farm payrolls on Friday, so ADP employment 115. Yeah, keep your eye on the unemployment rate, consumer price index, and year-on-year core out of Europe. So this is expected at 10 o'clock. Okay. Now remember, equities can be quite a tough one to trade when you get CPI data. Rather, I'd perhaps suggest you trade the euro versus the USD, or perhaps the Bund, for example, in terms of inflation. Should this miss, I mean, you know, we're talking about, I've shared an article and I'll send it to you guys, which is, you know, is it time for European bonds to start feeling Japanese? And it talks about how the Japanese deflationary cycle really kicked in 7 years after the big hit in the Nikkei and the big, if you like, recession. It was 7 years after that the bonds found themselves in a world of a spiral of deflation and stagflation. And should these CPI data heavily missed today out of Europe, people are beginning to think that the EU might be in danger of following in Japan's footsteps, which is exactly what they've been trying to avoid because Japan's taken 25 years to get out of this stagflationary environment and it's still not working. So CPI data 10 o'clock, that's very important both for bunds and for the Euro USD. For equities, hard to tell because, you know, a lower CPI isn't necessarily good news, but as you know, people might be seeing that as an opportunity for more accommodative policy from the ECB. So busy day today, ADP at 115, 245, Chicago PMI, crude oil stocks change 330 as you would expect out of every Wednesday, and then we've got Yellen speaking once again this evening. Let's see if her forward guidance can be as, well, not helpful as we've known it to be in the past. So European equities just ticking around a bit, a bit of noise this morning. What I would suggest on a day like today after such a pop is try and stay out of this action unless we're up at around 9,700 or down at around 9,600 in the DAX. To me, that's really saying that whilst we're in this mid zone, as you saw yesterday, you know, things can move without any particular reason why, and if you don't have discipline and if you're caught on the wrong side or if your timing's bad, you know, you can just give away money for no reason. So know when not to trade, key lesson of the day. Euro's had a heavy morning. I wonder if the Euro's trying to perhaps look at some of these weaker CPIs expected out of the Eurozone at 10 o'clock. However, having said that, yesterday the Euro was anything if not rampantly strong in the face of better than expected US data. So tough one to predict indeed. Guys, that's it from me. I enjoyed working with you yesterday afternoon. I know a couple of you got hold of some good trades. That was excellent to see. A bit of a choppy session. Let's try and keep our discipline for today, please. You've got enough data to choose when to trade. You've got enough activity throughout the day, all the way up to 3 o'clock, 3:30. You've got enough activity all throughout the day not to jump in now or not to try and force something when the market's not moving. So please do bear that in mind. Have a good session, guys, and all the best from me.